Donald Trump is not planning to give up. His supporters seem to block everything Biden does. Moreover, the decision made by the US Treasury Department had a negative influence on investors' mood. The fact is that all free funds will be put into the Treasury's General Fund. Treasury Secretary Steven Mnuchin will put $455 billion in unspent CARES Act funding in the General Fund. The main problem is that to use these funds, the Treasury Department will need authorization from Congress. After such a decision, the future Treasury Secretary will have just $80 billion available in the Treasury's Exchange Stabilization Fund. Notably, Steven Mnuchin's presumed successor is former Federal Reserve Chair Janet Yellen. Representatives of the Democratic Party accused Donald Trump of placing obstacles in the way of the future US president, trying to limit his power. In any case, this situation only proves that the US is leading into a permanent political crisis. Nevertheless, on Monday, the market situation was stabilizing. The US dollar advanced amid strong preliminary estimates of the US business activity. That's why it's quite possible that today markets will also make an attempt to come back to normal due to a bulk of information from the United States. Thus, the US will disclose data on its durable goods orders. If the indicator rises, it will be a good sign of a further advance in consumer activity and industrial production. Moreover, the second estimate of the US GDP may exceed the first one. It means that the US economy is actively getting back on track. At the same time, the US unemployment claims data will be released today, as tomorrow the US will celebrate its national holiday. The data is expected to be really positive. To sum up, all macroeconomic reports point to a good economic situation in the United States. This, in turn, should have boosted the greenback. However, the national currency is under pressure from the political factors. Let's take a look at the trading charts. The euro-dollar pair advanced from the support level of 1.1810 and returned to the resistance zone of 1.1900 and 1920. It seems that the resistance level is still waning on buyers. This may lead to a drop in the number of long positions, thus the price may fall in the near future. If the pair declines from the level of 1.1900, it may slide to 1.1810. However, if the euro-dollar pair consolidates above 1.1930 on the 4-hour chart, it's likely to jump to 1.2000. Since the beginning of the trading week, the pound-dollar pair has been hovering between the levels of 1.33 and 1.34, showing high activity. The pair is likely to go on trading within the range for some time. All changes will happen when the pair breaks either of the limits. That's all for now. We keep monitoring the financial market situation. Subscribe to our channel and see you in several hours. We will take a close look at the US trading session.